Testing, testing. Anybody there?
I am here.
Hi, Shaniqua.
Hi.
First to answer, how are you?
I'm pretty good.
Good, that's good. Yes, your colleagues are trying to get in and sign up. So
Yes.
we'll give them a few moments to do that before we begin. Okay. See, Monique, are you there? I see your name.
Up here.
Okay, great, Monique. Fantastic. I have to remember you're multitasking. Okay, Letitia, are you there? Letitia.
Yes, hello.
Okay, great. There you are. How are you? Hi, how are you?
I'm great, thanks. I'm doing
Say it again. We're just giving the others an opportunity to come in and sign up and join us. So let's give them about 5 more minutes and then we shall begin.
okay.
Okay, Brian, is that you?
Yeah, that's me.
Okay, great, great.
Yeah, sorry I late.
No problem, not too bad. Question for you, Brian.
Hey,
Since you started this course 4 weeks ago, including tonight, have you seen anything at work that causes you to wonder now that you have some more information?
every day.
You know what? I'm so happy you were brutally honest about it. I was hoping you would not try and be diplomatic. So thank you very much for that, Brian. And you will see much more. And the more information you get, the more clear things will be. So
Yeah.
okay, so we give Indira and Javon a few more moments, and then they will have to join us wherever we are. Okay, so Indira and Javon will have to join us. When they come on, we'll just get started. Does anybody in the group remember when your midterm exam is going to be?
March
Yes.
6th.
Yeah, March the 6th, that is week after next. So tonight, we are going to finish our discussion on audit types, etc. And then we're going to go right into module 3, which talks about audit planning. And then next week, we'll go into module 4. And wherever we stop in module 4 is where you will be tested the following week. Okay, so those of you who've still been busy or procrastinating, you still have now, you still have this weekend, you still have next week, and you still have next weekend, and all that good stuff. So please go ahead and do your thing in terms of preparation. There won't be any surprises, especially if you prepare. You'll be fine. All right, after class tonight, I shall send you a case study. The case study is not due until the final night of class, which is week number 12. Please make a note of that. I want you to have lots of time to put something together. Okay. Due week number 12. The case study is an employee scenario within an audit environment. And at the end of the case study, I raise a couple of questions for you to respond to. Whatever you do, please try and give me answers that are complete as possible. Try to avoid giving me 2 or 3 sentences. That's not really what I want you to do for the case study. I want you to go back into the case itself, give examples, give details, use your notes, add concepts that you learned throughout the semester, all that good stuff, and build each of the answers so that at the end of the day, you come out smelling like a rose. In other words, you actually put some time into those questions using the information that you have up to the point you're answering those questions. And then, of course, as the semester rolls on, if you start early, you can always add to your answers before week number 12. That's the whole idea, so that they are as complete as possible. I am not going to put a page limit, although I would rather not see the answers in maybe just 1 or 2 pieces of paper. I want you to be as detailed as possible so that you get into the material that you have been reading and studying throughout the semester. Okay. Am I looking for perfect papers? Of course not. What I'm looking for is a great and valiant effort. And for you guys, if you do that, you are more than halfway to getting those 10 points that you will get. Okay? Not looking for perfection, just a great effort in terms of trying to respond to those questions, audit questions, as much detail as you can. Did everybody hear that?
Yes.
Yeah, I got that.
Yeah. Any questions so far on that? Or you wait to get the paper?
I had a question in my head, but I said I'll wait until I see the case study itself.
Okay. What was your question, Ryan?
I was just thinking, okay, based on what the case study is, sometimes they give you scenarios, and depending on the direction you want to take, you may come with um, multiple scenarios on how it can be solved. Do we just have to focus on just one particular scenario, or can we do multiple scenarios? Or is how we, I guess, could explain it?
Well, for my class, I would certainly welcome multiple scenarios. If you find them and you want to present them, by all means.
Okay.
Okay. Um, I know some of us could be a little one-dimensional, get stuck in one area, but if that's your great strength and that's all you can see in front of you, one-dimensional thing, and make sure it's as dynamic as possible. But certainly, I encourage multiple perspectives. Don't try to say, "Well, I wasn't thinking," therefore you don't get credit. That's not the case here. I want to see how you're thinking. I want to see how you apply it. So whatever angles you want to use to make your point in responding to each of the questions, please feel free. Okay, by all means. Indira, is that you?
Good night. Good night.
Hi, Indira. How are you?
I'm good, and you?
Fine. Did you hear any of that stuff that I was talking about?
No, sir. Sorry about that. I just logged in.
Okay. Well, let's see if your colleagues can help you. Can somebody in the class? His mic is open. His mic is open. Yeah, still open. Okay. Can somebody in the class tell Indira what I just said? Anybody?
Okay, the case study will be sent at the end of class tonight.
Yep.
The case study is due the last class, which is week 12. Try to answer the case study as thorough as possible. He's not looking for no 2 sentence answers, but he's not giving you a limit on how long your answers are.
Yes.
If you are one-dimensional, make sure that you are thorough. But if you could take multiple avenues, he encourages that.
Absolutely. Did you hear that, Indira?
Yes, sir. I did.
Wonderful, Ryan. I couldn't have put it better myself. Good job.
Good job.
Sorry, can I get the due date again, please?
Ryan, did you date?
Oh, sorry. The due date is week 12, the last class that we have.
Week number 12, the very last class.
Okay, thanks.
If you finish before week 12 and wish to pass it in, that is not a problem. Feel free to email it to me with a note that you're done. Okay? Doesn't have to be the last class, but you do have until the last class. Okay? After the last class, you have to bring a sixth certificate, death certificate, your mom, grandmother, everybody. Okay? All right, good stuff from Brian. Javon, is that you?
Yes, sir. Afternoon. Sorry for my lateness.
Afternoon, Javon. That's okay. The point is you're here. Okay. Now, Javon, you missed a couple of little interesting things. And Brian just updated Indira, and now Indira is going to update you. Are you ready?
Yes, 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 yes.
Are you ready to be updated by Indira?
Go for it.
Okay, Indira, let it rip.
Okay. Case study will be sent tonight at the end of class. It is due on the last class, which is week 12.
Mhm.
Answer thoroughly.
Thoroughly, okay.
Thoroughly, yeah.
Yeah. At the end of the case study, there are some questions, and she got the instruction that they should be answered thoroughly. No 2 and 3 sentence answers. I'm not telling you how many pages, but if you give me 1 or 2, I'm going to assume that you're trying to get away with something. Make your answers as complete as possible for each question that is raised.
Okay, so send you a book. Got you.
Yeah, that's fine with me. Anything else, Adira?
No.
She said nothing else. Shaniqua, did
Okay.
Indira leave? Shaniqua,
Yes.
did Indira leave anything out for Javon?
Um, you're not looking for perfect papers, but you'd like for us to be as complete as possible.
Hold on,
No
Shaniqua.
2, 3 sentences.
Okay.
Yeah.
Javon, did you get that?
I got it.
I'm not looking for perfect paper. I'm looking for great effort. That's what Shaniqua was telling you.
Yeah.
Okay.
By all means, by all means. Which means that please don't wait until the last minute and then sit up the night before and try and do something ingenious. That's not what I want you to do. I want you to start early, read the case carefully, make notes about the case, start doing research, make research notes. That's what I want you to do. Because auditors have to write a lot when they're writing their reports about their findings, but auditors are not the only people who write reports. One day you guys are going to be all kinds of professionals in all kinds of areas. Not some of that are not even known to you yet. Okay, and one of your greatest strengths, if you have it, is your ability to write, to research something, check out the details, and write about what you've come up with. The more efficient you are at doing that, the more success you will have in more areas than one. So I'm not doing it to torture you, but I am doing it so that you can use your audit concept skills and your research skills, whatever they are, and put them in paper in the most coherent manner that you can. And whether you like it or not, as painful and disgusting as that might be, it will be helping to build your writing skills, your research skills, and your communication skills. Believe it or not, all of which auditors and everybody else, for the most part, especially in the professions and the work that you guys do, will need to be able to do as proficiently as possible. So if you're feeling tortured, that's okay. No pain. Anybody knows the rest of that? No pain. What's the rest of it? Nobody ever heard that? No pain,
No gain.
no gain. Okay. All right. One other thing. Can somebody remind the persons who came in late, the midterm exam is when?
March 6th.
March the 6th, week after next. Is there anybody in this class that does not live in New Providence? Okay. Everybody lives in New Providence. That's good because
I think
understand
somebody from the family has
No,
correctly.
I'm in Exuma.
And I'm in Cat Island, Mr. Wilkinson.
Tisha and Karen.
Yes, sir.
Wow, this is amazing. Indira, you were born in Exuma or you just an immigrant there?
No, I'm just over here for a while.
So you are there illegally.
No, my family is from here. My father was from here.
I know the Ingrams are definitely from Exuma for sure. So you're not an illegal immigrant. You're fine. Letitia, were you born in Cat Island?
I am. Oh,
My father's from Cat Island. Hello. Hello.
I don't know. He probably
Yeah.
Get no call.
Yeah. Oh, got muted. We can't hear.
I think he get no call because I don't even see him on the list anymore.
Yeah.
Okay, sorry about that.
Oh, he's
That's
back.
okay.
Okay, there you are, there you are. Those of you who live in the Family Islands or are in the Family Islands, you'll be able to do your examination virtually. And those of you who are in the province will have to go down to BIFS and write your exam in the classroom during the class time. Of course, the examination will be from the usual time, 6:30 to 9. Some of you may not need all of that time, but if you do need it, you will have the time available to you. Those of you who are writing your exam virtually in Exuma and Cat Island, can you hear me now, Letitia?
Yes, I can hear you.
Okay, great. Once you finish your exam, Miguel will give you the instructions, or whoever's dealing with that part of it. They will give you the instructions, tell you how to write your answers. And once you write your answers and you're done, you will be required to email your answers immediately to both Miguel and my email. Okay, please make a note of that. When your examination is done, save it in case something goes crazy, and then email it to Miguel and me, your lecturer, so that if something goes astray, one of us will have it. Okay? Indira and Atisha? The
Yes.
rest
Okay.
of you will have to go down to the
Yes,
class.
sir.
The rest of you have to go down to the classroom as you and write your examination, and when you're done, you pass it in and go home and take a break and get ready for the next week. Right? Any questions on any of that stuff I said? Fantastic.
That's okay.
If you think of anything along the way, please feel free to raise them. Don't forget, we still have another class next week to finish module number 4, and we tested up to and including module number 4. Um, as I was saying earlier, before some other persons came in, there will be no surprises on the test. As long as you prepare to the best of your ability and to be ready, you should be fine. Whatever you do, do not wait until the last minute. Okay? Last minute stinks every single time. Okay? I tried that a couple of times in my lifetime a million years ago. It's never a pretty picture. All right. So let's get into the audit world. I was asking somebody earlier if now that they have some of this audit information, they see things a little differently at work, and they said yes, every day. And I was saying the more information you get, the more things will look differently. You have a different perspective, whether you like it or not. When things happen now going forward, as you acquire more and more information in this area, you'll be far more critical than you were last year. You'll be far more ready, perhaps, to make recommendations on how some things can change and wherever you work in your jobs. That's the amazing thing, right? So don't be surprised. All right. Does anybody remember what we were talking about when we ended our discussions last week? Anybody remember?
I think duplicating errors.
Duplicating errors. Okay. Somebody remembers duplicating errors? Yeah, the auditor will be looking for those kinds of things. I'm sure you know that one of your questions on the 6th will be, what is the difference between error and fraud? I mean, I might forget to ask it, but it's very likely I will. It's not likely I'll forget. Too obvious, too important. Okay? I guess that's
What
a
other
hint.
questions will you most likely ask?
Boy, I tell you, this audit class making people sharper than a knife now.
Reference.
I like that. Yeah, she says, yeah, since you say that, then my audit instincts to ask me what other stuff is going on. Okay, well, keep your ears open. I might say one or two other things along the way, either directly or indirectly, just like the auditor. They come and says, can I see the file? That's directly. And then other times they're watching your behavior, your facial expression. They're listening to your answers to see if you sound suspicious. If you're trying to hide something, see? Auditors are doing all this stuff if they are reasonably seasoned auditors. And sometimes some of them are so seasoned that they can tell from your body language that something is wrong somewhere, depending on what they're looking for and what they ask you. And sometimes they ask you things for on purpose to see what the response of staff members will be. Or even the response of senior management for that purpose. And based on those responses or lack of response, sometimes it could make the auditor quite suspicious about what's going on in that organization. And as such, instead of just dealing with a limited amount of audit evidence, his suspicions might lead him to ask you for more and more and more and more evidence, just to make sure that you guys in your organizations are doing things right. That's why the audit function is so critical. Right? People in organizations hide stuff, they collude, they get together, they duck and dodge each other, duck and dodge senior management duck and dodge lower staff. People doing all kinds of moves in the organization. The auditor's job is to come in as the independent party. They cannot be persuaded by money or bikinis. Just do the work. Siobhan. Siobhan,
Yes, sir.
question for you. Are you ready?
Go ahead.
What is a man likely to be persuaded by? Money or bikini? A male.
Money.
Money? So what kind of male is Siobhan? Okay. Let me. No, nothing on that answer. Guys love money too. Okay, Monique. Let me get another perspective. Monique,
Yes, yes, sir.
question for you. Same question like Siobhan. What do you what do you feel is most what do you feel likely to put man? Bikini or money?
The bikini.
Yeah, Siobhan, you don't even know your own agenda. Monique answered the question for you. Okay? Bikini. Doggone it. Now, Brian. Brian will run off into the cloud.
Yay, yeah, I'm here.
Brian, what is
Yeah.
like being a female? Money or bikini? I mean, not bikini. Money or bathing suit?
The
Bathing
money
trunks?
though. Money though. Money.
Not the bathing trunks?
For the woman?
Yeah,
Nobody about that money.
not those muscles bulging.
No, they might be good to look
The
at, but
live
they want that money.
porn.
Yeah,
They might be looking to look at, but they won't.
yeah, they go want that money.
Yeah, chicks. Yeah. Okay, that was a live survey, ladies and gentlemen. Unfortunately, there is a cultural and universal truth to some extent to all that stuff, but it's good to know that you guys are on top of it, understand this stuff. That's good. You're not on audit evidence, fraud and errors. Okay, so before we get into audit planning, then, which is module 3, a couple of things I want to mention from module 2 that we were talking about, just as a quick recap, and maybe we may not have touched on one or two of them. My notes are showing page 30, misappropriation of goods. Is that what you guys have? Misappropriation of goods? Go to your notes and look for misappropriation of goods. For me, it's page 30. Let me know when you find it. Misappropriation of goods. It's right under
That's
misappropriation.
page 24.
Okay, page 24 for you guys. Anybody see it?
Yes.
Okay, great. Now, right on top of misappropriation of goods and misappropriation of cash, we talked about that as well. And one of the things we said is that cash is so liquid that you have to always keep it under wraps, because if you turn your eyes away from cash, somebody is going to get curious, creative, and swipe some, if not all of it. Okay. You have to be watching cash transactions to see who's taking in the money and what they're doing with it. Because, people might make a sale, for example, and if nobody's watching, they don't record the sale, just keep the money. How about that? Isn't that ingenious? You sell something, nobody's watching, you don't record it. You keep the money. How about that? Which is one of the reasons why we came up with cash registers, in order to make it harder for people to run off with money. Because now, when you have a cash register, the customer comes, what is the customer is expecting? Anyone? From that register?
Money?
Not the money. The customer came and bought something. What do they expect to get? It starts with R.
Receipt.
Yeah. And you can't get a receipt unless you ring up the machine, correct?
That's
Mhm.
correct.
Once you ring up the machine, that transaction is recorded with all the other ones, which means that at the end of the day, if that money is not there, you have to give a reason why. So the cash register is that ingenious creation that came up to control, as an internal control for cash transactions. But even though we have the cash register, people still find ingenious ways to get their hands on company money. Okay? And auditors are well aware of this. So the misappropriation of cash is always a concern, always, for the auditor. Anybody remembers what teaming and lading is? Teaming and lading? Lading and teaming? I don't mind if you Google it again. That's the whole idea. I want you to Google it. Teaming and lading, lading and teaming, lading alone, teaming alone. Did we come up with
Is that, I'm trying to remember from last class. Is it, like you use cash from one transaction to pay another, and you just keep on doing that cycle
Okay, who
to
agrees
an
with,
extent?
do we have a second? Anybody agrees with Brian? Using cash from one thing to pay the other thing and use that to pay the other thing? Anybody else has another perspective?
Yes, I agree with him. It's delaying and recording the transactions.
Yeah, delaying and recording transactions. How long the delay will be? Maybe a week, because the person might only need the money for a week, correct? They say, well, I get my ace draw next week, but I need this money dead bad today for something. So they fail to record it, give an account for it, and then the idea is next week they'll put it back. Or if they're in charge of petty cash, they might take it out of petty cash, and instead of writing up a receipt for the money, they just do nothing with the hope and prayer that they can get the money back before somebody discovers it's gone. Okay. All right, selling goods and keeping the money, making false entries in the accounts, and whatever money comes in, you keep that money. So if somebody comes in, for example, to pay an account that's in arrears, You put incorrect information or post incorrect information, keep the money so that nobody's the wiser until the customer comes back to check and discovers that the account balance has not changed and they want to know why. Okay, so many ingenious ways to run off with the money. One of the most famous and popular ways of running off with money is following the transaction, just never recording it. Don't record it in the general journal. Uh, don't write up a receipt. None of that stuff. All right. Recording fictitious cash purchases. So you say that the company spent $300 for something, you record it in the books, but it never happened. The $300 ends up in your pocket somehow. But the transaction never happened. Okay. Look at number 7, recording payments to fictitious creditors. Who is a creditor, anybody? Who's a creditor? I don't mind if you Google it, that's the idea. Who is a creditor? Who's a creditor, anyone?
Creditor is someone who extends funds or lends money to other persons.
Absolutely. Can you think of an example of a creditor in the Bahamas? Who might be considered a creditor in the Bahamas?
You have
A
the
bank?
banks,
A bank,
insurance companies,
insurance companies,
cooperative.
cooperative credit unions.
Mhm.
Everybody in this room, have you ever loaned money to anybody?
Right, private individuals.
If you lend money to somebody, you're a creditor. Do they always pay you back?
No.
No, they don't. They don't
Cheap, you
always.
call it a donation.
Sorry?
Is it cheap? You just call it a donation.
Oh, of course, depending on who you lend it to. If you lend it to a family member, write it off. If you lend it to a close friend, maybe, but it's iffy. If you lend it to a stranger, you're more likely to get it back than any of the others that I've mentioned. Okay? Family members don't believe they have to pay you back. If you have a family member who pays you back, count your blessings one by one. Don't make it a habit, because the next time you have no guarantee that will happen. Okay? But every now and then they shock you, you do it. But it's far easier to get money paid back by somebody you don't know than somebody you do know for some strange reason. You would think it would be the other way around, but it's not. Okay. Look at number 9, recording payments to dummy or ghost workers and then pocketing the money. So you said that you're paying money to employees that don't exist, employees who have died, workers who are not on the payroll because they're not there. But you're recording it as if they're there, and every week when the payroll is done, it's made payable to somehow to the dummy. You deposit it to your account and then keep the money. And if you are in fact the person going to pick up the bank statements, then of course when the bank statements come, nobody will be the wiser because you're the one who will be collecting them. Which is why internal controls are so important. One person shouldn't be doing everything, because then they can easily manipulate the system. For sure. All right, so manipulation of cash, always a big problem everywhere in the world. Bahamas, no exception. Misappropriation of goods, of course, on the other hand, uh, there are many ways to misappropriate goods as well. You record sales. Let's say you say that you sold 10 units when in fact you only sold 5. Um, and then somehow you misappropriate uh, the money um, and it ends up in your pocket. You misappropriate recording of purchases of large quantities. You put a figure, let's say $5,000, when in fact you did not purchase that amount. but $5,000 is actually written up on the check, and the check ends up in your other account that you have established somewhere else. Whatever the case might be, people go to great lengths, if you're not really careful, to get the money that they want, no matter how closely you watch it. And the only remedy is to watch it even closer than we watched before, and to have independent persons or auditors come in and look at your activities. As a matter of fact, if somebody's coming in to check, um, sometimes I do small business consulting, and I've been saying to small businesses, every 3 months, you don't have to call in an internal auditor. The external auditor, they're expensive in your small business. But every 3 months, you should have your accountant or somebody independent, an outside accountant or consultant come in and just start looking around. Two things happens when that happens. People see somebody coming in on a quarterly basis. That means they're going to wonder why, and hopefully they'll become more cautious about what they're doing because they know that this person will be coming. Okay. And secondly, having somebody who's independent from the outside come in, they can see things easier than people on the inside, including the persons in charge of the company. So there are some great advantages to having outside persons come in and look at your activities, helps you keep everybody honest and at bay. Okay. All right, so a couple of things might increase the risk of fraud or error within an organization. For example, if the internal controls are weak, then you're leaving yourself open for error or fraud, or both. Okay. So those control systems have to be set up in such a way that individuals cannot get away with murder. For example, if an individual is being responsible for a number of activities in the accounting department or within the firm, that's a big problem. That is an internal control weakness, because that means this person collects the money, makes a deposit, writes up the deposit, takes the deposit to the bank. When they prepare the bank reconciliation, they do all the posting to the general ledger. Man, you're setting yourself up for trouble. All those different functions should be done preferably by independent or different people as far as possible. Otherwise, you leave yourself open to major fraud and or error, both of which are not good. If there are any doubts about the competence of management, that can lead to fraud, most especially if management is incompetent or management is what we call crooked and not above board. Oftentimes that leads to fraud, and auditors have to always be aware. If they read in the newspaper that the chairman of the board of that particular company has been indicted for theft, or they've been accused of misappropriation, or whatever the case might be, that would be a red flag for the auditor, even though the chairman might still be chairman. They go into that company based on that information, they have to look at things a little more closely. Pressure within the industry can cause problems. For example, if the competition looks like they're doing well and the company's not, then you start doing things quickly, stop planning, start keeping things in order, and before you know it, you have a mess on your hands. You start spending money unnecessarily, trying to keep up with what the Joneses are doing and all this kind of stuff. And if you don't be careful, you can end up on the short end of the market and with serious cash flow problems. So be careful. Watching the competition, there's nothing wrong with that, but you have to make sure that it doesn't get under the skin, because it leaves room for multiple frauds and errors. Unusual transactions, those that don't occur very often. Excessive payments for services to lawyers and consultants. Money launderers love to do that. They would hire a lawyer or a consultant or an accountant, and they would say, I need you to send me an invoice for $3 million and put on the invoice for services rendered. Imagine that. And so the consultant, lawyer, accountant sends an invoice to the money launderer. And because it's for accounting, quote unquote, accounting and legal services, then the bank in wiring the funds to the account here in the Bahamas will probably not take a close look unless the bank is sharp enough to pick it up. Like, really? Accounting fees, 3 million? You've got to be kidding me. What kind of bank do you think I am? And then they stop it. But it doesn't always happen. So you can see, people are always up to stuff. And the auditors who come in, they know this. Problems with obtaining sufficient audit evidence, a big old problem sometimes. Sometimes an auditor goes into companies, can I see this file and this file and this file? And they come out, well, we only have 1 or 3. And he says, well, what happened to the other 3? And they shrug their shoulders. We ain't know. That's Bahamianese, so we don't know. Which means now the auditor doesn't have all the information they need to check, which is the whole idea. Because you don't have all the information, then you cannot collect the proper evidence. And if you cannot collect the proper evidence, then you cannot give a proper opinion on the results of your audit. There's method to the madness. Okay. All right. What is the auditor's duties and responsibilities with regard to fraud? They go in and look for it. They ask about it. They try to sniff it out, but they cannot guarantee you that they will find every fraudulent activity in your company. They cannot. It's not humanly possible. Okay. And so when you scroll further down, you see in very bold print, I underline it, the auditor is not and cannot be held responsible for the prevention of fraud and error. Is not and cannot. According to generally accepted accounting principles, the auditor is not a magician. They can only seek the evidence from what you have on your files. If your files are inadequate or you're not producing everything, you don't have them at all, then obviously some things can happen. The auditor is not going to pick up on all this. Okay? So if you see a question that says the auditor is not and cannot be held responsible for the prevention of fraud and error, true or false, that should be a pretty easy question for you to answer. Easy points. Okay? And so the auditor's opinion, remember at the end of the auditor will give an opinion. And based on what you guys have studied so far, what do you think the first sentence of that or last sentence of the audit opinion might be? Take a guess.
Say that again.
What do you think might be one of the key points that the auditor would make in his opinion at the end of the audit? In my opinion, it appears that this company is remember, what is the primary function of the auditor? Uh-oh. What is the primary function? I don't mind if you flip back.
Express an opinion
To give it
on
a
the financial
foundation.
statement.
Okay.
Yeah,
Yeah.
to give an opinion on the trueness and fairness of the
Mhm.
financial statement. Okay, to make sure that the balance sheet is correct and to make sure that the profit and loss is correct. That
Mhm.
is the primary function. All right. Very, very good, very good. And so that is what the auditor must be keeping in mind in terms of its audit opinion once they're done. If they're satisfied from the evidence that they collected and reviewed and tested, that pretty much the statements are in good condition following generally accepted accounting principles, then they will give a favorable response to the company shareholders. Why would the auditors give it to shareholders first? Anybody remembers?
Sorry, can you repeat that?
Why would auditors give their opinion to shareholders first?
Because they have the majority stake in the company.
Yeah, when you say majority stake, what exactly do you mean? You are right, but what exactly do you
Their what shareholders are more concerned in how, the state of how the company is doing,
Why are they concerned?
because they have something to gain and to lose.
Yeah,
I
remember,
mean,
who are the true owners of the company?
shareholders.
Absolutely. And that's the reason why they get the audit opinion first. Because primarily they're the owners of the company. The board of directors and senior management are just there to deal with the day-to-day decision making as instructed by the board, etc. Okay? But ultimately, the ultimate beneficial owners of the company are the shareholders. And they're the ones you should be concerned about most. So, the discovery of material misstatements in financial statements that may result from fraud or error does not, we are told, in and of itself indicate a couple of things. In other words, if we discover fraud and error after the audit is done and they're gone, and later on we discover fraud and error, that doesn't mean that the auditor did not obtain reasonable assurance and evidence. Nor does it mean that the auditor didn't make its plans to conduct that audit, nor use his or her judgment. Nor that it means that they did not exercise due care and professional competence, nor does it mean that they failed to subscribe to generally accepted auditing standards. Doesn't mean any of that. For some auditing firms, it might mean that because they're pretty sloppy, depending on who they might be. But on average, particularly the reputable auditing firms, should be all of them, because fraud and errors are discovered in the statement subsequent or after the audit is done, doesn't mean that they're incapable, incompetent, and carry out their audit professionally, completely, and didn't follow the auditing principles. Does not mean that at all. Okay. All right. So that's an interesting point to keep in mind. Right. Certainly, where we have intentional misstatements, the auditor might find some of them, but depending on how intentional it is, folks know how to hide things, even from auditors. Unless the auditor is keen or gets lucky, it may never be discovered. Wow. So we have to be careful. When I say we, I mean with our auditing caps on, to be aware that all of these things exist, so that when we go in and amongst persons within the firm, we can certainly do it with a greater degree of diligence, despite our best plans, for sure. So, if there is some evidence in the auditor's opinion that there might be fraud, the auditor has to ask him or herself, how material or significant is this fraud? Is it going to cost this company a lot of money potentially, or a few bucks? Do I report it if it's only a few bucks or not? Do I have a duty to the amount or to the circumstances? But the auditor certainly has a duty to report, for sure. Sometimes in the auditor's judgment, though, small errors and frauds, well, frauds, auditors tend to always, most times, want to record a fraud. Why do you think he might be more anxious to always report a fraud than an error? Anybody?
Because frauds are more intentional, while errors are just unintentional mistakes made by the.
Absolutely. Frauds are more intentional. And so any kind of fraud, even if it's a small amount of money, the auditor will take note and maybe even report it, and should. Because if it's small today, what's going to happen tomorrow? It's going to be bigger tomorrow. Because you know how folk go. The more they get away, the more they think they're getting away, even though they're closer to getting caught. But somehow money mesmerizes folk when it's time for them to misappropriate it, especially if they think for some reason they can get away with it. But the auditor must certainly, while he cannot take direct responsibilities of errors and frauds, they must understand the implications and consequences, even on their own reputation, depending on what the potential loss is to the company. Not that they didn't do their work, but they can miss it. It's like a doctor. They come in and run all kind of tests, yet they cannot discover what the problem is. and the patient dies, and the family sues, etc. Okay. So again, all of this is just to remind you not only about the differences between errors and fraud, but the types that occur um, within the worlds, within the auditor's world, and especially in terms of trying to find errors and fraud. For many auditors, it's a frustrating exercise because sometimes they have a feeling they know based on other information that they should be finding more. For example, how do you think an auditor might, by the way, does anybody knows who audits the gambling houses? Anybody? No?
Say that
Okay.
again.
Auditors?
Who are the auditors for the gaming houses? Any of them? What's the most popular gaming house in Nassau?
I don't know.
Love.
Yeah, Island Lock. Can somebody type in who are the auditors for Island Lock? Let's see if we get lucky. I'll be right back while you
They're,
do.
they're internal auditors or just on
Oh,
external auditors?
yeah, external auditors.
I think
Oh, yeah, now you're thinking about it. Hold it.
no, it
Exactly.
was,
External, that's good.
I know it's a firm that does their
It
external
is.
auditing.
Yeah, if you type it in Google, does the name of the firm come up? Type it in. What is the name of the auditing firm for Island Lock? I'll be right back while you do that research.
It's Grant Thompson.
I don't see anything come up, per se, who are the auditors for that, for the company.
Okay, is anybody else have any luck with Island Lock?
It wouldn't be a government agency?
No, well, a government agency might come in for tax purposes to check to see if they're paying back.
Hmm.
But you guys are the auditors. I want you to, yeah, dig. That's what auditors do. Dig. By the way, do you think Island Lock pays back?
Yes.
I would hope so.
Okay, go into
They do, but I don't know. I
Go
don't
into-
think so.
go into Google and type in, does Island Lock pay back in the Bahamas? I'm just turning you into little junior auditing monsters. Because that's what auditors do. They dig. They research, they ask questions. They go where no man likes to go. Anything? Any evidence? Any information? Evidence? Information? Evidence?
No. Wow.
Wow. What's the big secret?
That they
mean-
may not be paying it.
So we cannot find any information on Google of all places. I thought everything in the world was on Google, wasn't it?
Hmm.
How come we can't find out who the external auditors are for Island Law? How come we can't find out if they pay back? Shouldn't it be there somewhere? Like we Google anything. If we type in Lassie, a big old fluffy dog from the 1950s will show up, wouldn't you? So what's the deal with this other thing?
The question is that the true
The only
name of
thing
the
was coming
company
up
or
is-
that's just?
Well, somebody's getting even more creative. Like, wait a minute, is that actually the name now? We need to investigate that. This is what auditors do. They start digging, and then one thing leads to the other thing, and one thing leads to the other thing. And depending on how close you're getting to the truth about something, you might run into some trouble from senior management or staffers. Somebody starts to get nervous, have a nervous breakdown, faint, start crying as you get closer to the fraud. Welcome to the auditor's world. And this doesn't only have to happen with external auditors. This can happen with internal auditors as well doing their checks. It can also happen with an employee just pretty much observing something that's not right and getting ready to blow the whistle and expose the person or persons. So when you go back to work and say, don't mess with me, I have some audit expertise now, it cause me to discover stuff. Okay. All right, so there you have it, some food for thought. You went digging around looking for evidence and you couldn't find it. Doesn't mean it's not there. How about that? They probably do have an external auditor. I sure as hell hope so. Okay, those
They-
guys get,
They do.
yes, they do. But who?
I don't know right now. I can't pull that information right now.
That's okay. If you could pull it for next class and tell us, that's what auditors do. How about that? And since
Yeah.
you're an auditor, yes, go hunting around until you find out the information.
I can find it now.
Then once you find it, well, two things for next class. Homework. Find out who the auditors are for audit luck. Now, don't go and break in and start trying to look into files and all that. Don't go that far. Auditors don't break the law. Do some research and see if you can find out who the external auditors are and whether or not they pay back. Okay. I suspect if you call in non-revenue and say, does Audit Luck pay back, they might be suspicious. Like, why the hell do you want to know? And then you'd be like, I'm an audit student. Why is it a big secret? They either paid or they don't. And they're like, we're not authorized to tell you. And you're like, why not? I'm an audit student. I'm just checking to see. Isn't this public knowledge? And they'll say, maybe. And then you say, what maybe mean? See? Because I'm a budding auditor now. But what does maybe mean? Is that a yes or no? And auditors don't quit until they get what they want, at least not a good auditor. All right. So there you have it. Some interesting things to keep in mind. Okay. But if the auditor discovers fraud and errors, the auditor in the financial statement, the auditor is required to disclose it in his audit report, no matter what the consequences. He or she has to say in their report that these are the things that were discovered for better or for worse. Somebody loses their job, it's not the auditor's fault. If the CEO goes to prison, it's not the auditor's fault. They're just there to do their jobs, and that's what is required of them. All right. Does anybody know or remember the difference between a statutory audit and a non-statutory audit? Google it, statutory audit. What does it say?
Statutory audits are mandated by the law.
Absolutely. Which means that non-statutory audits are
Not mandated.
Mandated.
not mandated by the law. So, for example, in the Bahamas, every financial institution, bank, credit union, insurance company are mandated by law to have their financial statements audited once a year. They don't have a choice. If they don't do it, there are penalties. They have to provide their audited financial statements to the central bank and Securities Commission to make sure that they are being audited. When the Central Bank of the Bahamas and Securities Commission do on-site examinations, they check to see if that information is there. When was the last time we audited? Who are your auditors? 3 years ago, are you kidding me? You don't know the law, you want us to fine you? And so on. Okay. So, what then are the basic principles of the audit? Very simple, a nice list. Read it. Remember, this stuff is not just for you to get through an examination, though that's important, but it's also there for you to carry forward in your working and professional lives, whatever capacity you're in. Audit concepts and techniques and responsibilities are important in any kind of operation. Question. Do you guys know what we call a pumping truck in the Bahamas? A pumping truck?
Pumping truck?
Yeah, a pumping truck, a pumping business.
It's the first time I'm ever hearing that.
Wow.
The-
Okay.
Pumping truck
Same.
comes to clean out your sewer,
Yeah.
your sewage.
Yeah.
Who said sewage?
Me,
Who's me?
Monique.
Monique. Yes, Monique is right. These are the guys that come with a big truck to pump out your sewage from your cesspit. That's why we call them pumping trucks. We don't call them like cesspit trucks. We call them pumping trucks. That's the polite name for those guys who pump your cesspits. So those of you who never heard that polite expression for that work, that's what it's called. Can you please call the pumping truck? The cesspit has overflowed. Okay. How about that? Never thought you'd learn about a pumping truck in an audit class. Well, of course, now you know audit can land you anywhere. Ah, for sure, including prison. But let's not go there. That doesn't apply to any of you. All right. So, what are some of the basic principles of the audit itself? Well, there are a list of important words you should keep in mind. Integrity. What's another word for integrity, anybody? Starts with H.
Yeah.
Honor.
Honesty.
Say it again.
Honest.
Honor.
Honesty. Yes.
That's-
Honesty is what we call integrity. So if somebody tells you have no integrity, do not smile and think they're flattering you. It's an insult. Unless, of course, you have no integrity. Then it's the truth. Right. So, basic principle number one, auditor must have integrity. The auditor must be objective. What does objective mean? They cannot
That's-
allow personal feelings.
Without bias.
Yeah, they cannot allow bias. They cannot take a position because of some connection to somebody or something. Okay? They have to be objective, they have to be unbiased. They have to keep their personal feelings out of the situation. That's why they're required to be independent, meaning they must come from outside of the firm. Because those people who are in the firm, it's hard to be objective. It is. It's like asking a mom to give evidence and information on her son, even if she knows he did it. She'll know sometimes and still wouldn't do it. She said, you guys are trying to get me to say something negative about my son, even if she knows. I will not. Miss, we lock you up. Lock me up. I'm not talking on my baby. He is a good boy. And all of you police are a nuisance to society for trying to come and take my good son away from me. Okay? There's no objectivity when it comes to moms and their sons, parents and their children. It's out the door. All right. Then we have confidentiality. Those of you who are in financial services should know all about confidentiality. I don't need to say much more. You'll read it and you'll know. But essentially, whatever information that you handle that belongs to people, it should be private. You should not go home or anybody and discuss it with anyone. Same with the auditor. Auditors have all kind of top personal information, financial information on a lot of people, good, bad, and ugly. But they cannot, in their professional capacity, discuss anybody's personal or financial affairs with anyone, not even their spouses. If the spouse wants the other one to know, they will tell them. But a banker, because you know somebody, you are not at liberty. For example, if somebody's husband has $5,000 on a CD, and you know the husband and the wife, you cannot go to the wife and say, you know, Tom, how $5,000, girl? She say, what? $5,000 and that doll you didn't tell me? Or whatever. You can't do that. You might cause a fight because you're not confidential. You might ruin your reputation if it discovered that you are not confidential. The person you told it to, if it gets bad enough, when it gets to court, she'll say, well, Javon told me, the banker, Javon, don't you know about confidentiality? Didn't you do that in that class? He said, yeah, but I didn't see anything wrong with it then. There is something wrong. Confidentiality is confidentiality. Okay? If you're a nurse or a doctor, you cannot discuss your patient's affairs with anyone, not even your spouse. That's how serious this business is. Let's not forget other principles, skill and competence, very important. Skill is the way we go about using our experience to get things done, ask the right questions to look at the correct things, to check the necessary and important stuff. Skill. Just like a mechanic and an engine takes skill and experience to maneuver through all that crap, and then put it all back together again and make it work. Skill and competence. Work performed by others, auditors cannot escape this, remember? Certain thing, auditor cannot do everything. If it's an engineering problem, you have to get an engineer. If it's a legal issue, you have to consult the lawyers, and so on. And so therefore, there is this dependence on others to some extent that the lawyer has to make. Sorry, the auditor has to make this. They can't do everything. Okay? And welcome to society. That's how our society is built. None of us can do everything. And so we rely on each other to provide us with the goods and services and information, whatever that we need. All right. Documentation. I don't know how many people in this class have been a part of any audit, but they're always writing stuff down. And the reason why they write stuff down is because they have to have written evidence of the work they do. It's called documentation. If you review the whole company, you don't write anything down, you don't write sufficient down, then you're not audited the company correctly. Documentation is a very fundamental and crucial part of the audit process. Just like compliance, if you don't document it, it never happens. Audit is the same. You can go and conduct a full audit. If you don't record the details of your audit, it never happens. Whatever's not recorded, it's never happened. No matter how you cry and beg and plead. Document. And of course, do not assume your auditor comes in helter skelter. They're coming in with an audit plan, which we'll talk about in module 3. An audit plan, step by step on what they're going to do in that audit. They're not haphazard. Some auditors are haphazard, but others are very organized and structured. We talked earlier about audit evidence, that the auditor should obtain sufficient and appropriate audit evidence by conducting compliance and substantive test procedures. What is that? Get the file, open the file, go to the invoice, take the $5 million transaction and the invoice back to the purchase order, back to the bank statement, back to the bank account, and so on. And if you detect fraud of any kind, then the appropriate action is to be taken. But at the end of the day, when the auditor says in his report that I have discovered fraud, he must have sufficient evidence, just like the police, to prove his case or her. Okay? This is what we call audit evidence. It is only from the evidence that the auditor finds in his searches and questions and deliberations with employees and others. It is only in this audit evidence search that the auditor can draw what we call reasonable conclusions. Notice, not perfect, just reasonable conclusions in his audit opinion. So when that final opinion is done, it's never written to suggest that the auditors have found all the errors and all the frauds. No way. And that they even covered all the audit evidence. No way. But it can be said in that opinion that they collected sufficient evidence to satisfy them that the company is in financial trouble and that its primary adversary is senior management, the greatest crooks in the company that this company has ever seen. And until something is done about it, then we have a problem. All right. We said already that the audit is coming in to look at the accounting and internal controls for obvious reasons, making sure that generally accepted accounting principles are being conducted. And it's from all this information that the auditor will draw his own conclusions in terms of that report. For sure. We already talked about the difference between statutory and voluntary. Another name for non-statutory is? Another name for non-statutory, anyone, is?
Voluntary.
Yeah, voluntary. Thank you very much for actually being on cue. Certainly couldn't come up with that one unless you were following along. That's the idea. Okay. So that when you get to reading and studying, etc., you'll be like, oh yeah. Okay, yeah, cool. We said something about that. I remember saying that. So now we know the difference between statutory and voluntary audits. Another name for voluntary, non-statutory. So if I were to say to you in examination that voluntary and non-statutory are not the same, true or false, what would be the answer?
False.
False. Way to go. Wasn't exactly a straightforward question. He thought about that for a while and said, you're not going to get me with that. And that's what I want you to be able to do come examination time. You're so comfortable with your notes and your studies and review that thing. It'll be difficult for you to get caught and not knowing a particular thing. Okay? We talked about the internal audit, their role within the company, the role within the interim audits that are conducted from time to time, the importance of carrying out audits not only of financial information but operations and HR and every other important area of the company. And this interim audit is usually designed when it is believed by management that the company needs to be pay closer attention in terms of what's going on in it, whether it's something untoward, whether something is going in a direction with certain staff members, whatever the case might be. This interim audit is designed for the auditors to come in twice a year, typically, in order to keep tabs on what's going on in the company. For sure. The interim audit, right? We also talked about the continuous audit. It's ongoing, it doesn't quit. Those firms that need watching all the time, like crypto companies, they need a continuous audit because they need somebody there watching 24/7. Crypto companies. Maybe if they had done half of that, Sam and company would not have done with that crazy stuff they did. With continuous audit. All right. So what are some of the accounting issues that are relevant to the auditors? I'm not going to label you with all the concepts and principles. I will mention a couple that auditors might be interested in. For example, materiality. And you're given a definition of materiality. Does anybody see the definition of materiality? First sentence or first two sentences? Can you read it? Materiality, what is it? Materiality? Go ahead. Yep.
We're going to read it. Information is material if it's misstatement,
Yeah,
influence the economic decision of users taken based on the financial information. Materiality depends on the size and nature of the item, judged in the particular circumstances of its misstatement. Thus, materiality provides a threshold or cutoff point rather than being a primary qualitative characteristic which the information must have if it is to be useful.
thank you so much. So from the auditor's perspective and the accounting perspective, a materiality issue exists when whatever it is could influence the economic or decision making of the senior management or anybody else using that information. For example, if the company is a multi-billion-dollar company and the audit discovered that $5,000 will disappear out of the company, they may not consider that to be material enough to report. They might say 5,000 out of billions, who cares? Of course, 5,000 out of a small business is another story. Very material. For a billion-dollar company, it may not be material at all. But for a smaller company or an individual, it is a big deal. Okay? So clearly you can see that materiality has to do with how decisions are affected, whether it's $5 or $5 billion. Decision making is going to be impacted by the process, then we have to consider its materiality to be whatever it exists at the moment, whether it's 5 or 5 billion, all relative. And this is where the auditor's judgment will come in. I found this thing, is it material enough for me to report? If it's a small business, it might be. If it's a large business and somebody stole $100 out of a $10,000 petty cash, you might say, you know what, I'll warn the person, but it's not a big deal to pursue. I'm not going to lose sleep when I get up at night. Materiality, very important concept. Okay? And so there's quite a discussion. Some of it is repetitive for a reason about materiality, where it says that it does recognize certain matters, either individually or in total, to be true and correct, etc. But again, at the end of the day, if you have a situation where you cannot capture, for whatever reason, the situation is true economic sense, and determining what the materiality concept might be, the thing to consider. What is the amount relative to the size of the firm? If it's small, maybe the auditor will let it go, or not. Because even though it might be small, it might have some other implications. That if somebody is willing to do this, steal $10 for 5 years, what are they going to do next? So even though it's only $10, and materiality concept says doesn't matter that it's only $10. It's the problem underlying the theft of $10, which includes the person doesn't seem like they could stop. They continue to do it until we find a way to stop it. So welcome to the world of materiality, for sure. We already said that the auditor is always looking to consider possible misstatements and errors. Always, the auditor is always looking to determine whether a finding is material or not. If it is, then they will take action, they will expose it, they'll report it, they'll put it in the report. If it's not, they're likely to just leave it and move on. Or sometimes what they do is, when they have the senior management meeting after the audit, instead of putting it in the audit report, they determine, oh, this is not material or significant enough. We just mention it to senior management. And hopefully when we come back next year, the problem would be solved. A lot of chit chat on materiality, because materiality is one of those subtle concepts where if you don't really get a grasp on what it means, then you can kind of get lost in the translation. So, but keep it simple. Materiality is anything that can change your decision, your business decision. That's what we mean by economic decision. Materiality is relative. Okay? Whether an amount is important or not depends on the size and complexity of the company And most auditors are well aware of that, especially the seasoned ones, and they come in to do their assessments. Now, the going concern concept in accounting and for auditing purpose really is that basic concept that tells us, look, if a company's useful life is going to go beyond the next 12 months, then we say that the company continues to be a growing concern because the auditor accountant believes that after 12 months, the company will still be around, alive, and well, based on the results of the audit. Now, even though an auditor might suggest that the firm is a going concern that will be here 12 months later and beyond, that doesn't mean that that is always the truth. That doesn't mean that things cannot change. Okay? And so one of the ways that we try to manage the going concern concept is to say, hey, if we see enough audit evidence to suggest that this company is not going to survive the next month, it's going to close its doors, COVID has devastated it, etc., whatever the reasons, then what's going to happen is the auditor is going to say, this is a material matter. I have information to suggest that company is not going to be a going concern. And then everybody gets in a panic. It's how do you know? How can you tell? You're not a fortune teller. You don't have a VG board. None of that stuff. How could you tell? Well, remember the auditor typically has what? Judgment and experience. And so oftentimes when we go in to look at the growing concern perspective of a particular company, they draw on their experience and their background to help them determine, okay, this firm I'm auditing, is it likely it'll be here a year from now? Or is it so bad I need to tell them what they're dealing with because of the potential threats to a growing concern concept? So when you're reading this and studying this and thinking, really asking a question on growing concern, I might, but remember, unless I ask you specifically, just please answer the question. So if I say, what is a growing concern? You can go ahead and say, this is a company that potentially will be in business beyond 12 months. That's the answer I'm looking for. Now, some persons get a little carried away. They start giving a bunch of details, which is fine if you ask for them. Okay? So you have to always be careful. All right. Let's see. Just as we approach, there's a paragraph in here for those of you who are following on the number 2, on the going concern, that says when planning and performing audit procedures and evaluating the results of that audit, the auditor should consider the appropriateness of the going concern, meaning whether or not the company will be solvent in 1 year or less, whether or not we'll have enough money to stay in business within the next 12 months. If it's likely to go out of business in the next 12 months, then the auditor has to report that concern, that the going concern of the company is under fire for whatever reason, and therefore that company, that individual or that company has to go back to the drawing board to see what can be done. Now, auditors don't try to get into the day-to-day affairs of management. That's not the job. But if they're conducting an audit and they see something that could suggest that the company might end up in trouble, the auditor has the responsibility to disclose this, either verbally or in writing or both, to the management of the firm. Of course, the auditor has to be careful how he talks about going concern, because if the auditor says, I don't think this company is going to be here in the next 12 months, you guys should shut it down, and then they go and shut it down and discover 6 months later that they really shouldn't have shut it down, that a whole new gig is coming to town, that business will be booming and all that stuff. So now you have shut down based on the auditor's information, and so therefore the company might then say to the auditor, you've cost me money, Mr. Auditor, making that wrong decision about closure. And as a result, we're suing you for 10 million. Make that 20 and hurry up and leave before I make it 30. Okay, kind of thing. All right. So I think I've said all I want to say about the growing concern. I think you get the idea about how it works. And usually it's the contemplation or discussion or consideration about a growing concern is that the period in question does not exceed 1 year after the balance sheet date. Okay, for sure. Welcome to the going concern assumption. All right. And so even though it's an accounting assumption, the auditor still has to come in with a mindset
Sorry,
that
can you repeat that last part for me just now?
the going concern concept,
Yes.
yeah, the fact that when we talk about the going concern concept, we're talking about what we call the foreseeable future for the company. But the catch is that foreseeable future for the company usually is not for a period greater than 12 months or 1 year. So if an auditor is come in there doing an audit and they see that the company is running out of money, that sales are dropping, that expenses are increasing rapidly, that in the auditor's mind, that's a company that may not be in business in the next 12 months. And if they feel that way, they have an obligation to say so to the shareholders. That's what we mean by the going concern concept. Okay, for sure. Is it an appropriate concept? Every appropriate for the going concern is relative, but it is something that auditors think about, because if they go into a firm and they're conducting an audit and it looks like the company is not operating properly or they're losing market share, or things are just not going right. Like, for example, some companies may have gotten that, hey, going concern issue when during COVID. Some auditor might say to them, man, you need to close your door. You know, where are you going to survive this audit? The next couple of months, you're going to be out of business anyway. Go to the government, get some money, and see if we can make it work for you. And so, yeah, this going concern thing is a very real issue. And the obligation of the auditor, if they believe that the company will run into financial trouble within 12 months of the audit, then they're responsible for telling the shareholders and the management exactly that. All right. So that's a whole lot of stuff and a big old mouthful and a big old earful. And so we'll take a 2-second break and mull on all that crazy stuff. Misappropriation of cash and goods, audit evidence, the going concern concept, the auditor's principles of integrity and independence, and all these great values and skills, etc., that the auditor is required to have to get this job done. No wonder when they're done, they send a big fat bill. Because clearly, this is no child's play. And in the real world, even more so. For sure. All right, any questions so far? I think you guys kind of raised them along the way, which is exactly what I want you to do. All right, so remember, if you need to run off and have coffee or whatever you need to have, feel free to do that, and then rush right back to this crazy stuff. Okay, so now I think we've kind of exhausted that particular module. We can now fairly comfortably go into the next module, which is module what, anybody? What's the next module?
3.
Audit planning.
Yeah. Module 3. Called, yes, somebody said it, audit planning. Now, suffice it to say, I don't think there's anybody in this room that does not know what a plan is. We plan to do, what kind of things do we plan for? Anyone?
Vacation.
Vacation, yeah. Vacation, yes. What else do we plan for?
A wedding.
Wedding, yes, why not? A wedding. Anything else we plan for?
Christening.
Sorry?
Is there a christening, baby shower?
Yeah, baby. I see you plan for the baby shower before the baby. Do we plan for baby?
Not all the time.
Sometimes, but it don't always work out.
It
That's
doesn't always
funny.
work out. Now, guys, let me tell you a little secret that the girls don't want you to hear. Should I tell them, ladies? Because guys are kind of dumb. Shall I tell them, ladies?
Go ahead.
Okay, she said it reluctantly, if you have to. But we don't really want fellas to know our secrets. Okay. Uh, Brian and Javon, are you interested in this little girl secret?
Please do tell.
Ready? Okay.
Go right in.
Here you go. Whenever she comes to you and says, Javon, Brian, we need to talk, or I need to talk to you. Oftentimes that means the next thing that comes out of her mouth is, don't make me say it,
Pregnant.
yeah, I'm pregnant. Now, a lot of times, for example, for some strange reason, when young, middle-aged, and even older people, like when somebody gets pregnant, like everybody like acts surprised, I'm pregnant, like this shock. And then the guy's like, you're pregnant? What are you doing? Like what? So what's with all this behavior like you're shocked? Anyone in this class? This is an audit class we're investigating. We're looking for audit
Because it wasn't planned. That's why you're shocked.
It wasn't planned. Okay, yeah, that's true. It sure as hell wasn't planned. Uh, and so anybody who grew up with older people, they'll tell you if you didn't plan it, then there's certain things you shouldn't do until you planned it, or there's certain things you should do until the plan is executed. A lot of times we don't do it. Like somehow, for example, we say people decide that they're going to get on with it and not use something that we all know is called a starts with C. What's that word, anyone? Audit evidence starts with C. You guys gonna make me say it?
Contraceptive.
Contraceptive, yes. Most of us know that we should, male and female. But oftentimes we just like, man, the devil with it. And then after we like, hopefully nothing happened. Like, oh my God, like that. And then sometimes it happens, see, they're unplanned. And everybody's like, oh, how in the world did that happen? Really? Sort of thing. Some people run their companies exactly that way. No plan, no contraceptive against things that can go wrong, no internal controls against persons who are going to steal money, nothing. You just let everything run wherever it goes. And then when money is stolen and goods are taken and things go completely wrong, they act shocked. And why are you shocked? If you didn't take any measures to protect, see? Why are you shocked if you didn't take Mr. Businessman, woman, if you didn't take any measures to protect your company's assets? Why are you shocked, new mom and dads, if you didn't take any precautions to protect against getting pregnant until your plan was ready to be executed? Same principle. I told you, audit takes you into all kinds of crazy stuff that you would never believe. Okay, for sure. All right. So, why do I say all of that? I say all of that to say all of this. After all of that we've already spoken, we now have the audit plan. Okay. And I just want you guys to know, in case you didn't know before, when the auditors come in to do their audit, they come with a plan called an audit plan. They don't come bringing it. In fact, if you have an auditor who comes in bringing it, somebody's in trouble. That company, the auditors, somebody's going to be in trouble because the auditor should always come to an audit with an audit plan. And so module 3 talks about that audit plan. Okay. All right, so I think I've yapped enough. for the evening so far. Let me see who. Letitia, you read last week, didn't you? Letitia?
Yes, I read last week.
Definitely, definitely. Brian, did you read last week?
Yeah, right.
Yes, you did. Let's see if we're gonna find any evidence of persons who didn't read and say they did. Say auditors, it is audit class. The auditors are always digging for evidence to support their opinion at the end of the audit. Javon, did you read last week?
Yes, I did. Right off the brand.
Yes, indeed. Yes, indeed. Indira, did you? Indira, I don't have any evidence. Did you read last
No,
week?
no, I didn't.
You didn't read last week.
No, I
Wonderful.
didn't.
Wonderful, Indira. That means that you are now up to the mound. Okay?
Okay, no problem.
Get ready to bat.
Okay, let's go. Where we reading from again?
Audit planning, beginning with auditing and assurance standard 1. Scroll right down to module 3, audit planning. Not to worry, we're waiting patiently as you scroll. Checking to see if Indira didn't run off anywhere. Oh, she's there. Found it.
I was reading.
Oh,
So sorry for that.
you were
I
reading
was
with your mic
Hey,
off?
I'll start over. Sorry, hold on.
That's funny. We thought you ran off to get away from reading.
Oh no, I'm right here.
I know.
Okay, you can hear me. I don't know. Let me see.
Yeah, I can hear you now. Can everybody hear Indira? Yes?
I think she going out again.
Yes, must be a BDC internet.
Hello.
There you are. Where'd you go again?
I don't know why I keep shutting out. It's on. I have it on mute, and then when I
Does anybody know what's happening with Indira? What's going on with her mic? She comes in and then when she gets ready to read, it cuts off. Is that a coincidence? Uh, no matter how well, hello, no matter how well you plan, crap happens. See, Indira, hello,
hello.
hi, Indira.
Yeah, I don't know why I keep doing like that every time I start to read because I'm on my phone though. So I don't know why when I move it to go to the screen, I don't know why it's not doing. You hear me?
Yeah, every time you're talking normally about not reading, we can hear you. The minute you say I'll begin reading, then we can't hear you anymore.
You hear me?
Yes.
Okay, I can try click on it now. Good. Hello.
Hello, hi, you can hear you.
Hear me? Okay, good. Ready?
Yes, we are.
Auditing planning, meaning Auditing and Assurance Standard 1AA S1 states that for the audit that the auditor should plan his work to enable him to conduct an effective audit in an efficient and timely manner. Plan should be based on knowledge of the client's business and should be made to cover, among other things, A, acquiring knowledge for the client's accounting system, policies, and internal control procedures. B, establishing the expected degree of reliance to the place on on our internal controls. C, determining and programming the nature, timing, and extent of the audit procedures in the be performed. D, conducting the work to be performed. Plan should be further developed and further developed and revised and as necessary. Hold on, let me change it because let me change. One moment, hold on. Let me go to the computer.
Okay. Indira?
I just pulling it up on the computer so I can see better. This is actually on my phone.
No, that's
So
great.
that
Just
wasn't.
just want to make sure we can still hear you.
Right here. Okay, good. All right.
Okay.
Okay. Plans should be further developed and revised as necessary during the course of the audit. Audit planning should be continuous throughout the engagement and involves 1, developing an overall plan for expecting scope and conduct of the audit. 2, developing an audit program showing the nature, timing, and extent of the audit procedures. Change in conditions or unexpected results of an audit procedures may cause revision of the plan. The reason for significant changes must be documented. Objective of auditing planning. Adequate audit planning helps to 1, ensure that appropriate attention is devoted to important areas of the audit. 2, ensure that the potential problem are properly identified. 3, ensures that the work is completed expeditiously. 4, properly utilizing audit assistance. 5, coordinate the work done by other auditors and experts. In planning the audit, the auditor will consider factors such as complexity of the audit, the environment in which the entity operates, his previous experience with the client and knowledge of the client's business. The auditor may wish to discuss elements of his overall plan and certain audit procedures with the client to improve the efficiency of the audit and to coordinate audit procedures with the work of the client's personnel. The overall audit plan and the audit program, however, remain the audit's responsibility. Factors to be considered. In planning the audit, the auditor will consider the following factors: complexity of the audit, the scope of work and reporting responsibilities is analyzed in order to determine the complexity of the audit. environment in which the entity operates. This enables the auditor to understand various operational aspects of the audit. Example, the extent of computerization, the nature of internal controls, and the general attitude of the personnel. Previous experience with the client. By analyzing the previous year's audit, working papers, and other relevant files, the auditor should pay particular attention to the matters that required special consideration and decide whether they may affect the work to be done in the current year. Knowledge of the client's business. This is required to establish the overall audit plan. The auditor will be able to A, identify the areas that require special audit consideration, B, evaluate the reasonableness of accounting estimates and management representation, and C, make judgments regarding the appropriateness of accounting policies and disclosure.
Before Indira goes on, does anybody know what a judgment call is? When we make judgments or judgment calls, what are we doing? How does that work for anyone? When we make a judgment or judgment call, what are we doing in general? I know you've heard that expression. It's one of those expressions we hear, but we don't really stop to think, well, what does that really mean? I walk in the room and I said, I don't know, I just used my judgment in making that decision. I didn't have any add up any numbers. I didn't do any research, just use my judgment.
Are we going based on our own knowledge and experience of the matter?
Yeah, we make decisions based on our own personal knowledge and experience. And to the extent that we have extensive knowledge and experience, we make good judgments. And to the extent where we have very little knowledge and experience, we make poor judgments. Thus, when two teenagers sneak off at a party, they don't have enough information about contraceptives. See, back to that again. So they make what? Poor judgmental decisions. And we end up with a whole bunch of teen mothers and fathers. Okay? Interestingly enough, whenever we talk about teen mothers, we don't say teen fathers for some reason. And we have many teen fathers out there. Surprisingly enough, but nobody talks about them as if they're not really relevant for some reason. All right, strange. But yes, that's what a judgment call is all about, based on our knowledge and experience. So typically, if you have great knowledge and experience, you have tend to exercise good judgment in auditing or in general. And if you have limited experience, you tend and competence, etc., you exercise poor judgment. So before Indira goes on from the judgment calls in this audit planning process, what do we say about a female, ladies, that keep choosing the wrong kind of guy? What do
Poor
you say?
judgment.
Yeah, poor judgment. I mean, like after dog or number 3, but you shouldn't get it by then. Shouldn't you have a better idea, like who to date and who to turn down?
Right.
Some people, like, they don't get it. They keep getting stuck by making poor judgment calls. Okay, absolutely. Okay, very, very good. And so when the auditor comes in with the audit plan, they're making judgment calls too. Everything is not based on numbers and research and all that stuff only. They use their experience, their background, etc., to help them make determinations. Sometimes they might start talking to you as a staff member. They're not just always talking to you because they feel like being polite. Sometimes auditors approach staff members on purpose and ask them certain questions about the operation to see how informed they are about the business. And they ask a couple of people to see if everybody's on the same page.
Right.
All of that, believe it or not, is part of the auditor's planning, within the auditor's plan and within the auditor's judgment implementation, what they usually do. All right, keep going, Indira.
Discussion with the client. The auditor can discuss his overall plan and certain audit procedures with the client to improve the efficiency of the audit and to coordinate the audit procedures with the work of the client's personnel. However, the overall audit plan and the audit program remain the auditor's responsibility. Source of information. According to the AAS 8, the auditor should obtain a level of knowledge of the client's business that will enable him to identify the events, transactions, and practice that, in his judgment, may have significant effect on the financial information.
Take a pen, Indira. Now, see that point she made with the source of information? Notice. Now, auditing standard 8 says, as she said, the auditor should obtain, see, watch this. The auditor should obtain a level of what?
Knowledge.
Knowledge, not just running like I'm the auditor, get the hell out of the way. I know everything about this bloody company. Shut up and sit down. No,
Right.
he has to obtain a level of knowledge of the client's business first. That will help him to identify what's going on in that firm. Same thing when you're dating with somebody. See, that's why we make poor decisions over and over. We don't obtain the knowledge we need about who the hell we're dating. And we like, don't I look cute? You look so handsome. I like that car. Where are we going to eat? Let's go to Fusion or whatever we're doing.
Yeah.
So we're doing a bunch of stuff, but nobody's obtaining any level of knowledge about who the hell they're dealing with. And then
Wow.
when things go to hell, everybody's like, what the hell? So follow the activities of the auditor, obtain a level of knowledge about what you're dealing with, just as they do with the firm. The more information the auditor gets on the business and how it works, the more effective the auditor will be. See, the more effective the auditor will be in executing the auditor's plan. See that? It all follows through. It's no magic. It's no rocket science either. It's all about getting the information and putting it into practice, putting it into effect. All right, keep going, Indira. Don't worry, she's reading. We just can't hear.
Oh, so sorry. Okay. The auditor can gain knowledge from the client's business from 1, the client's annual report to shareholders; 2, minutes of meetings of shareholders, board of directors, important committees; 3, internal financial management reports for current and previous periods, including budgets; 4, previous year audit working papers and other relevant files; 5, personal responsibility for non-audit services to clients who may be able to provide information on matters that may affect the audit; 6, discussions with the client; 7, client's policies and procedure manual; 8, relevant publications from professional bodies, industry publications, and trade journals; 9, magazine, newspaper, or textbooks; 10, the economy and its effect on the client's business; and 11, visits to the client's premises and plant facilities.
Notice, folks, look at all the possible avenues, and this list is not exhaustive. I just put 11 important points there. That's not all that they can look at. See, to get knowledge and information on the client. Notice, not after the audit has started. When is he getting this information?
Before.
Before. Okay? So when Tom Jones, Indira, and Shaniqua and company, this Tom Jones, why don't we go over to my place? The first thing you should tell them, well, I don't even have any evidence of who you invited me to your place. I don't know the hell you are.
Let's gain some knowledge first.
Absolutely, Siobhan. Yeah, look at it, Siobhan. How I could go to your place and I don't even know you, Siobhan? Let's get to know each other first. Then, and this Siobhan. Well, I thought after 2 days we knew each other. I said, Siobhan, are you kidding me? You didn't hear what Mr. Wilkinson said in that bloody audit class? We need to collect information and chuckling and evidence. Okay. All right. Keep going, Indira.
According to the AAS 8, during the planning of the audit, discussion with the client might include the following subjects: change in management, organizational structure, and activities of the client. 2, current government legislations, rules, regulations, and directives. 3, affecting the client. 4, current business development affecting the client, current or contingent financial difficulties or accounting problems. 6, the existence of interests, parties, and transactions that might impact the firm.
Keep going.
Development of an overall audit plan. The auditor should consider the following matters in developing his overall plan for the expected scope and conduct of the audit.
Now,
A.
watch this. So stick a pen in the notice. All this crap about audit planning so far. See all that stuff she talked about, read, and we discussed. The audit hasn't even what yet?
Audit.
The audit hasn't started yet.
Oh,
So all this work has to be done when? Before
before.
the audit even gets started.
Mhm.
That's what the planning process is about. That's the whole point. And this whole audit planning preparation process is really what a lot of company managers and boards of directors and other persons who run firms and entities and all this kind of stuff should be thinking about. Make sure you do enough planning before you jump into the boat to go sailing. And then you discover in the middle of nowhere that the thing you're sailing with is not really an oar, or it's splintered and it will soon break because you didn't check to see, nor did you check to see if you had an extra one or two, nor did you take any backup. See? You just grab them and start rowing. Welcome to the auditor's world. All right. These same principles, the reason why I asked you to stop a couple of times is to show you that yes, these are audit practices in order to get the job done, for the audit to get to where they want to go. But these are also practices that we can use in our own professional and personal lives to the extent that you need them. Trust me on that one. All right. Keep going, Indira.
A, the terms of his engagement and statutory responsibilities. B, the nature of timing of reports or other communications. C, the applicable legal and statutory requirements. D, the accounting policies adopted by the client and the changes in those policies. E, the effects of new accounting or auditing pronouncements on the audit. F, the identification of significant audit areas. G, the setting of materiality levels for audit purposes. Oh, okay. H, conditions requiring special attention, such as the possibilities of material error, fraud, or vouching. Vouching in practice followed in an audit with the objective of establishing the authenticity of the transactions recorded in the primary books of account. Its essentiality consists of verifying a transaction record in the books of account with the relevant documentary evidence and the accounting basis on which the entry has been made. Vouching also confirms that the amount on the voucher has been posted to an appropriate account, which should disclose the nature of the transaction.
I noticed this before she goes on. See that word vouching?
Mhm.
Vouching, crucial audit practice. It should also be a crucial practice for persons who work at any kind of business as well. Because what vouching does in practice, it verifies that the information is correct. For example, if you have a deposit slip in your hand as an auditor or as an employee for $3,000, the first question that should come to your mind about that deposit slip is what? Anyone? You have a deposit slip in your hand for $3,000. You're an auditor or you're somebody working for the company. What's the first question should come to your mind?
Copy the check.
Where's the voucher to go with that?
Well, even yeah, okay. Where's the other side of the voucher? Where did the money?
Or where did it go?
Well,
Where
Where
is-
it came from? Where they
where it
come
came
from?
from? Yeah, let's say the voucher is a deposit slip. You have a deposit slip in your hand for 3,000. That first of all, that deposit slip said that the deposit was made to the bank, right?
Yeah,
Because the bank stamp is on it, isn't it?
right.
And so if you're an auditor, you will take the deposit slip and go to the bank statement to see which day, let's see whether the bank statement is showing that deposit, correct?
Right.
Remember, because you have the bank statement in your hand with the bank stamp, that doesn't mean that the money went to the account. Here's why. Here's why. The person who works at the bank could be friends with you. Stamp the bloody deposit slip with the bank stamp for half the money. And so the deposit never gets to the bank account, but it has the stamp on it. Correct?
Yeah.
And so if the auditor doesn't check to see that the money didn't actually go to the account, they may never pick it up. Because the auditor might say, oh, the bank stamp is on it. Banks don't lie and ain't nobody in the bank crooked. So I don't need to check that. Is that? No. A good auditor will not do that. They will vouch it. They will take that deposit slip, go to the bank statement, and see if that deposit actually went to the bank. The other question is, where did the 3,000 come from before it went to the bank? Well, you have to vouch again. You start tracing the 3,000 backward because it must have come from the sale of something, correct?
Yeah.
Yeah. Then you discovered when you start looking back to see where it came from, that the sale wasn't actually 3,000, was 7,000. Brian?
Yeah.
And so your question and the auditor's question will be what? Where the hell is the?
Voucher.
Me.
No, the 4,000.
Mhm.
4,000.
And whoever thinks first, start investigating with them first. All right? I'm just showing you. And the vouching process is really the checking of documentation to verify. That's what vouching is. Okay? In case you have, again. But you can see why it's important for the auditor to vouch and check, because deposits may never get to the bank, even though it may have a stamp. And the amount that went to the bank, even if it did go to the bank, may not have been the amount of the original sale.
Right.
Wow. And instead of being 7,000, it could be 70,000 or 7 million. Welcome to the world of audit. Welcome to the world of verification and vouching. Verification to crap that can go on right under your nose at work. Yes, your nose. You guys in this room. Without even realizing it. Okay, and dear, you're the one reading it. You brought all this stuff up. Keep going.
The essential points to be borne in mind while examining vouchers are: 1, the date of the voucher falls within the accounting period. 2, the voucher is made out in the client's name. 3, the voucher is duly authorized. 4, that the voucher includes all the relevant documents which relate to the transaction and that the voucher is complete in all respects.
So in other words, you have a sales voucher and then the audit comes, where are the details for the sales? We can't find them. Really? The minute you tell your auditors you can't find their supporting documents, they're immediately, they're going to become suspicious.
The light
Because
goes off.
yes,
Something.
yes, the source document should always be present.
Support.
Always, absolutely. All right, keep going.
5, that the account to which the amount of the voucher posted reflects the character of the receipts or payments posted thereto. After the examination is over, each voucher should be either impressed with a rubber stamp or initialed so that it may not be presented again in support of another entry.
Imagine, some people are so sharp on the job. When the auditor is checking a particular voucher, they have to put their audit stamp on it or initial it, so that when they call for a voucher again, the staff member doesn't bring the very same one back.
Wow.
Wow is correct. How about that? People have come up with all kinds of ingenious ways. You'd be shocked to take possession of the company resources and even to try to outsmart auditors.
So
If you're
even
up,
as an auditor, you have to be very sharp.
very much so. Okay, very sharp, very knowledgeable about the process, very keen about human nature and about the kinds of things that can actually go on. This kind of stuff only comes with what? Experience and time and training. Okay, of course, much of which you guys are getting. I know sometimes it may feel like torture these weeks, but it's not torture at all. It's training in a very important area of life, of business, important in terms of what you do. No matter what type of job you have, these principles somewhere along the way, many of them will apply in one form or another. Even when you're off your job, doing personal stuff, you walk into somewhere, your auditing spidey senses go off like, wait, one cotton picking minute. So based on my studies in auditing, something isn't right. Then you start digging, looking for evidence to see what the hell's going on. How about that? All right. Okay, keep going. And finally,
the audit program. An audit program should be set up for each audit. The audit program is a list of examination and verification steps to be applied to the audit process. An audit program consists of a series of verification procedures to be applied to the financial statements and accounts of a company, obtaining sufficient evidence to enable the auditor to express an informed opinion on the statements. For the purpose of program construction, the following points should be considered. 1, stay within the scope and limitations of the assignment. 2, identify the best evidence of the audit process. 3, apply only those steps and procedures which are useful in accomplishing the verification purpose in the specific situation. 4, consider all possibilities for error. 5, coordinate the procedures to be applied. What is the best evidence for testing the accuracy of any assertion in a matter of expert knowledge and evidence? This is the primary task before the auditor when he draws up the audit program. Transactions vary in nature and impact. Procedures to be prescribed depends on prior knowledge of what evidence is reasonably available in respect of each transaction.
Thank you very much, Indira. Thank you very much. For that. I don't know about the rest of you guys, but I am intrigued by the way Indira presents information. It's almost like James Earl Jones on TV. It's like it keeps you captured, like keep reading, like you read this stuff in such a way that while you're reading, that you're learning it, even if you're not interested in learning it. It just like captures your attention. Anybody in the class agrees with me?
Thank you.
Yes.
Yeah, she like, yeah, this thing that she has when she reads. Way to go, Indira. Thank you very much. So we're gonna stop there tonight. What I'd like you to do, there are a couple more pages left under audit planning. Please go ahead and finish that reading and go on to our final module, which is module 4. When we come back next week, we'll complete our discussion on audit planning, and then we'll jump right into module 4. What is the topic for module 4? Anyone? Module 4.
Audit techniques?
Yeah, audit techniques. So we'll finish our discussion on planning. I think we've pretty much exhausted all the key stuff. There are a couple of advantages and disadvantages of planning, 1 or 2 other points, but she kind of brought all of the key things to our attention, and then we'll jump right into some of the techniques that auditors use in order to conduct an effective audit. All right. So again, if you are still kind of lagging behind with your reading and your studying, try and catch up. You have this week, still you have the weekend. Don't plan anything important unless it's very serious. Make some serious time available for reading and studying and studying and studying. Studying stinks. We all know that. However, there's no way around it. And the better you do that, the more successful you'll be. And then before you know it, your 12 weeks will be done and you'll be off and running with all this great stuff behind you. All right. So have a safe week, and I'll see you guys again next Monday, same time. All right. If you have any questions, please, you know how to reach me. And as I promised, I'll be sending you the case study for you to begin reading and planning, how to attack those questions I have at the end. All right. So take care, and I see you guys next week.
Good night, all.
Good
Night,
night,
everybody.
everyone.
Night.
Good night.
Night. Take
Night.
care. Good night.
Everyone.